not satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I want to finish the story about the donuts. Anyway, I went over to the donut wheel here in Tucson many years ago, at least 16, 17 years ago, to talk to the gentleman about getting these donuts and delivering them to the Veterans Hospital. And I told him what we were doing, and he thought that was a good idea. He said, well, I'll give them to you at cost. And I said, wow. I said, that's a good idea. I said, well, do you want to double the order? And so the whole order was like retail, like $750. So it was $375 a piece. And so we did that. And the next year when we went back, he wouldn't even take the $375. He said he had so much enjoyment by just seeing those people with their eyes wide when they brought in all those donuts. He said it was really worth it, and so he does it every year. So I was glad to see that. That gives me another $375 to go to Aqueduct today, but here I am in Tucson, stuck here working with you lovely people, which is good. Folks, I posted a chart here of the NASDAQ. Okay, now I want you to see we had the best day up in the NASDAQ, I think, ever. I really believe it was up 8%, I believe. And as you can see, it barely took out the highs of a week ago, and it's still setting exactly at the 382, even after all that stuff that happened. There was no increase in the NASDAQ open interest, and there was no decrease. It was basically flat. So this market is still got some problems, and I don't know where it's going to come from, but I just want to tell you that I was very frustrated to miss that up move. Now, that up move was triggered by a potential economic event that has changed the economic thought. In other words, the price of things, inflation, is starting to go lower. Folks, I mean, I know it dropped from 7.9 to 6 something, but I mean, I'm not seeing anything in the couple of days that I do the shopping and getting gas and stuff that doesn't see any big drop in inflation anywhere here. Houses, the prices here have dropped, maybe 3 or 5% probably, but really not much. But I guess it's enough to get the market going, and that's good. Now, the second thing I wanted to talk to you about is yesterday I did a Money Show presentation with my friend Tom Hugard. And it was their usual one, but we were doing live, and so we were in there trading. And what I was looking at yesterday, I'll show you the charts. I think I mentioned it, but I want to go through it because the response that happened, it was really amazing here. Now here's what we were looking for. We were looking for a really good high here in Goldman Sachs, the big stock at the Dow Jones Industrial Average, and that number came in at 468. And I said, we're going to sell it at 468 or better on the opening. And that's it. Well, this was right before we start. I mean, this is right before the news came out. So we got filled at 472. And I knew immediately, I said, this is not good. And so all I was doing is I was walking through the whole process of why I selected that trade, and I wanted to get it up here to show you because the response, and I'll go into that just a second, is there's where we were. Now, I was doing this, and then Tom followed up right away. But you'll see here, I showed him all the ABCDs that were there. I showed him the ones, the 3 drive to a top pattern, the ABCD to the down pattern, and there's where we were now, setting exactly at the 61% retracement when we closed at 468, and it gapped above it. And what happened was next, and Tom had been short the Dow Jones when it was starting that run. He got out of it immediately. I mean, it moved 200 points so fast. He lost about $100,000 in about maybe 2 or 3 minutes, maybe 5 minutes, but it was really quick. Anyway, we went through this, and what happened was we were discussing why we were wrong, and like it didn't mean anything, and it really didn't. And the people that were there saw that, and they said, "My God, the way you're not mad, hell, what to be mad about? I lose all the time. Of course, I win all the time too, but the response that we got was really, really good." And so the folks there said, "You ought to do this more." And I'd say, "Well, why don't we do a big one in Las Vegas for the money show?" And so they're thinking about that. So keep your fingers crossed. We're going to do 3 days in Las Vegas, 2 days of live trading and 1 day of teaching, if we can do it. But chances are slim and none. And those are those two cowboys riding on the ridge up in there. So anyway, that's what we were watching here today. Now let's get back to something that we have been following very, very closely, especially in the newsletter, and that is the fact that there was a really strong indication this week that the dollar index had topped. If you'll notice here, we had the 135 pattern over the top. This is Sunday night. You can see the big move we had down Friday. That was telling you that 135 pattern right up here was actually a pretty good pattern. Okay, now you see the target was down here at 107. The difference is, folks, the target didn't mean anything, and I'll tell you why. Because if you look at it, of what we're doing today, the dollar index is actually falling out of the proverbial waterbed. Let's get this up here and take a look at it. And there it is. You can see we're breaking down really hard. So this weekend, what we have to do is we have to figure out, where would be the first level for possible support or a rally. So you want to get short, because this is a 3 drive for sure. Okay. So if the market breaks, what you want to do is to watch for that first 382 retracement. The only thing that was down yesterday was crude oil, and we were actually short that. It dropped over $6,000 from the 382. It went to 91 to 85. We got out of it at 87, but it was still a heck of a move. And so what you want to do is watch for this 382 retracement when we finally get it. See, because this is a big move down here. Look at these last corrections that we had. We had this one, we had this one, and we had this one, and then the game changed. The game changed right there at that 78% level, because that set up 0.2 or 3, and there's 0.5, and then boom, down it goes. And so that's what we're watching here with the U.S. dollar. And also, at this same time, we need to look at the euro, because the euro has had a really nice move. Let's get it up here so you folks can see it. And here again, it is also setting, well, it's above it by quite a bit, actually. So you can't really say that it's setting at the 382, because it's about 30 pips above it already. But you can see here we had the same, here's that same 135 pattern upside down that we had. There's your 1, 3, and 5. That's the upside down version of the 385, and higher bottoms. The other one was lower tops. And there's your 382 retracement. Now you've completed the A, B, C, D of this move right here. I haven't done the calculations yet, because I'll do that over the weekend. But those are the ones that we're watching most closely, because there's going to be some huge moves, coming along down the trail that we'll be able to do. Okay, now I think we're going to take a little break here to pay a few bills. And then when we get back, I want to talk about the old Bondolis, because they've had a bada bing, bada boom type move, and we're ready. So we'll see what happens here.
Currencies, commodities, and bond markets are as important as ever right now, with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and we are going to talk about the gold market here. Most of you that follow the 24/7 and the videos and stuff know that we've been very bearish gold since way back here after we made this retracement Gartley spot in here. We sold it here, 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 and here, in different trades, of course, because we covered these positions. But what we did is we did sell this one right here, and we covered it right here on the low day, right down here at 16.25. The low was 16.18. And from that level, we've had a heck of a rally, and we were long. The problem was, Johnny, yes, I'm going to tell everybody why I was upset. I got out of it a little too soon. We got out of it at around 16.44. We took about a $1,900 profit, and soon as I was after I did it, I said, oh, this is a mistake. And so we tried to buy it back on the first 382 retracement that we had that came in Thursday night at 17.05. The problem was the market only went to 17.05.10, and it by 10 cents, $10. I missed that whole move of, this last one is up to it's $80, $8,000. So I was a little frustrated about that. So missed the stock up move, missed the futures up move in gold. Did catch the move down in crude oil, but that's okay. But look where we are right now, folks. We made the 382 of the move right here. You see that black dark line there? All I did now was to clone that line and move it over because that's where we are. We're coming into this 382 right now, which is the high of the whole thing way back here. So I'm assuming what's going to happen is we're going to probably touch this line, and then we're going to start to back off, and that's going to be the key to this because, there's still a long-term weekly out there that comes in at around 1540. Whether that's going to happen or not, I don't know. But the fact that this thing has exploded here in 7 or 8 days is different than this one. You see, this one took about 10 days to do it, but they're very similar type moves. So the market's just doing the same thing. There is a possibility because this huge ABCD down here that this is the low. There's a possibility that 1616 may be the low in gold for a very long time. But we've got to get above 1800 in order to prove that that's it. And we're not very far away. I'm assuming someday there'll be some profit taking, and then we'll get a rough idea of whether 382 is going to hold or not. But right now, you just have to wait. So that's what we're paying attention to now in the gold market. I'll cover silver also in the market. We hit $22 in silver. It's moved $4 an ounce, which is good. But gold has moved actually a lot more than that. Gold has moved quite a bit. Okay, that's what we're paying attention to in the gold market. Someone had a question about that stock that the gentleman talked to on Monday, and that was that thing that I think they called Magnavox. I want to get this up here to show you what we're looking at here. I recommended that he get out of it at that 650 level. This was right up here with the ABCD here. Now you see with yesterday's action and today's action, it's up a tiny bit more, but still, what I think is still in the zone. All this move here is this distance to this distance multiplied times 1.618, and that takes you right up to this level right here. So I think that one is also, hey, but it might be like Goldman Sachs. Goldman Sachs went all the way up to 480 at one time, and we sold it at 472. I mean, I didn't put the trade on because I don't trade stocks. I was just giving in the example, and when I got to 474, a $2 loss, I said, well, it's going higher. Didn't buy it, but it looked like it wanted to go higher. But the fact that the people were really enthused about the fact that Tom and I were losing, and I'll tell you one even better than that. This goes back 20 years ago at the money conference in New York. John Hill and I were trading live in one room, and Larry Williams was trading live in another room, and I think it was John Bollinger or somebody else was trading live in another room. We had about 250 people in our room, and we started early in the mornings. It was like 8 o'clock New York time, and so the markets we had overnight markets in the foreign currencies and some of the others, and the S&P we had begun trading the overnights there. So we had a couple of trades, and boy, boom, 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 we're 3 losses right away. I mean, boom, boom, boom. John looks at me. He said, well, it looks like we're going to go to Rubens and have a great breakfast, huh? And I said, yeah, probably. I said, this room will be empty in about 20 minutes. These people went out into the hallway and stuff. The place hadn't filled up yet, but they were in there talking about the 2 professional tradings of getting their kabuki kicked. And they said, you got to come in and watch these guys lose. He says, it's really a lot of fun. And so all of a sudden, instead of people leaving, more people were coming in because they wanted to see what we were doing to lose. But then what happened, unfortunately for us, that we started winning. And we had a really great day for the next 3 hours. We did a total of 3 hours, but we started really badly, and people were interested in the losing part. And folks, that's what you've got to do when you're learning how to trade. Tom Hugard wrote this great book, The Best Loser Wins, and that you got to think like the best loser. The best loser thinks, how much money do I have to see, whether I'm right or wrong, to do this trade? And once you figure that out and realize that you don't know what's going to happen next, and you're never going to know what's happening next, you're going to be okay. These markets are really great for trading recently, and they're going to continue to be great. The volatility is going to stay here probably for at least a year. And, we'll see, but that'll be about the time they finish up what the election votes will be. Just about a year would be my guess. So anyway, that's what it was really exciting about it, is the fact that people were interested in how we handled the loss. Because, I handled the loss okay. I was frustrated for the people that follow me, and I do pretty good because I get really nice phone calls, emails, and presents even, So the thing is, sometimes I'm right, sometimes I'm wrong. I know that I'm right more than I'm wrong because I've been doing it too long. So all I do is just try to pick the ones that are best. But when I miss that gold trade, the stock trade, not so much, but the gold trade, because I really screwed it up, and then not to get filled by 10 cents, it would have been a really, really big winner, but that's okay. We made some money in crude oil, and that's pretty much what we're watching. We got a break coming up here relatively soon, and where we're going to have Stan Harley as our guest. And I wanted to bring one other chart up here that I'd like for you to see, because it's got a chance here to do something, pretty exciting. Let's get up here to hold on, this is it right here. This is the Bitcoin. We're going to be watching this extremely carefully, folks, because my friend John Jameson believes that we've got one more big leg coming down here. We hit 16. He thinks we probably will get between 10 and possibly even $4,000 in Bitcoin is what we're looking for. So I'm hoping that we'll be able to do a special promotion or special program on the cryptocurrencies, whether you believe it or not. You know, they've been around for 4 years now, and they're listed on the exchange. They're for real. It's not a what do you call it? Tulip bulb for sure. Hey, stay tuned for Stan, the man Harley stock market letter coming up.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have Stan Harley, the Harley Stock Market Letterer, award-winning letter for about 35 or 40 years. Stan, tell us what's happening in the market, because the rally that we saw Friday was almost like it was back in 1995 when Alan Greenspan, in the middle of the morning, dropped interest rates 1 point. And, you know, that's when we started the big .com run. But this was really quite spectacular, what I saw on Friday. What did you think? It was yesterday.
Well, it was indeed, Larry. And I think it's just part and parcel of a trend that's running up. We probably have a couple more weeks to go before it runs out of rocket fuel. I don't think the bear market decline is done. I think there's a little bit more to go, but right now we're in a bear market rally. These types of explosive pops to the upside, at least in my 40 years of experience, are more typical of bear market rallies rather than bull market rallies. We don't tend to see this kind of upside in a bull market. But lots of trading opportunities. But as I go into in some charts here in just a moment, I'm going to show you where I think this might come to an end and what we can expect for further downside.
Okay, the first chart we're looking at is at SPX.
Yes. Well, this is a weekly chart, Larry, going back about 20 years. And what I've done here is I have put vertical lines on the major turning points for the last, since the 2009 bottom. And within 3 weeks, and that's a pretty tight regression analysis, within 3 weeks, every single turn of significance is lined up with a major Fibonacci ratio, 236, 382, 618. The March 2020 low lined up with the 0.854 Fibonacci ratio. Mm-hmm. And then when I carry this out to the 1.00 ratio function, it lines up with the end of the year. So we got a little bounce in mid-October off the 200-week moving average. We're still in that right now, but as you can see from the weekly chart, we really haven't moved a whole heck of a lot. Got a little bit more to go, but I think there's another shoe to drop, and I think at the end of the year is going to see lower lows in some stocks, perhaps a retest in others.
Wow, this is a really interesting one. Well, you mentioned the last time you were on that there was a possibility we could have a short covering rally, and by golly, we sure did. So.
Yes, and so how long is this thing going to last? Well, the next chart
okay.
is
a daily
chart of the S&P 500.
Oh, I really like it.
6-7 months.
I really like this one. I see a lot of stuff already.
You and I've talked about this cycle on the air on a number of occasions. What I found is certainly over the last many, many months, the market has had a propensity to make significant trading cycle highs about every 18 trading days. 18, of course, is a Lucas number. You know, I talk about that a lot, how important the Lucas number series is. I found that both Fibonacci numbers and Lucas numbers are critical in defining how the markets move. In my experience, Fib numbers tend to work better in timing sequences from low to high or high to low. Lucas numbers appear to do a better job in defining sequences from high to high and low to low. That's not 100%, but that's probably 95%, and that's pretty darn good. Anywho, long story short, Lucas number 18, as you can see, within a day or two, is defined every single high. We were on the air a couple of weeks ago, and I said, I think we're getting really close to a next 18 trading day cycle high, and that occurred on the 1st. And we had a sharp little pullback there for a few days, another little pullback 2 days ago, and now we're marching higher. We might hesitate for a couple of days early next week, but I think the trend is going to be modestly northbound into November 22nd, November 23rd, assuming, of course, this cycle continues. And if it does, we might see the next trading cycle high there and then a downturn into the end of the year. Now, what also happens is very often when I go on the air with you or anyone else and talk about these cycles, guess what? Poof. The cycle gods intervene and they say, guess what, smart guy? I'm going to make sure that doesn't happen for you. I don't know.
That's
never heard that happen, Larry?
That's never happened to me, Stan, in all my not more than 4 days a week.
So here I am, jabba about an 18 trading day cycle. Here's when it's likely due, but you know the cycle gods are up there pushing and pulling on those levers. They may or may not let it happen.
Yeah, that's right around Thanksgiving. And of course, the day before Thanksgiving is the most positive day of the whole of all the trading days of the year. The day before Thanksgiving is the most positive day. It's up like 74% of the time. But when it's not, oh my goodness, get ready for something right after Thanksgiving because it'll go the other way. I've watched that cycle and studied it for many years. So that is the most positive day of the year. It's 74% of the time it's up. Okay. Well, interesting to know statistic. I was kind of vaguely aware of that, but not as knowledgeable of it as you are. I'm looking for this thing to run out of juice right about that point. So whether the last day is up or I just think this thing is going to stall out within a day or two of that date. That's what I'm watching very closely. But like I said, those cycle gods are up there, and they might want to make sure that doesn't happen because I've gone out over the world to talk about it. Stan, just a minute now, pal. You've been on this show for several years now, and you haven't missed much. I mean, you've been pretty spot on these things. That's why you're one of our preferred guests, because you're right. The first day that you're really wrong, we'll never see you again. But so far, you're doing okay. Of course. Next chart, put things in perspective, and then blow the whistle on me when we have to take a break. But okay, we got another couple minutes, so keep going, and I'll let you know. This is a continuation of what you and I have showed on the air the last several months. And what I've done here is I've modeled the pattern from the January 4th all-time high in the S&P all the way through the present. And every single turning point, 100% of them, is lined up with a major Fibonacci ratio within a day or two. 100% of them. And the next Fibonacci ratio, 0.90983. That's a smaller one, but it's significant nonetheless. It's due, drum roll, November 22nd, November 23rd. So there's another reason why I think we might reverse about that point. And then the subsequent one within the model is at the 1.00 point, and that occurs right at the tail end of December, the last day or two of December. So I think, long story short, summarize, we rally into week of Thanksgiving, turn south, and the next 5 weeks we go probing for the downside once again. Wow, that's really good. Okay, by the way, Stan, we were laughing before. I did a live thing with Money Show yesterday with Tom Hugard, and Tom was losing about 120 grand while he was talking, and he trades big time. I mean, that 120 is not much, but he did lose about 120 grand. But the people really like to see us lose. They wanted to see how we handled it, and the fact that we did, it was just a loss. It was no big deal. Hey, folks, we'll be back with Stan Harley. You'll be back with us, Stan, right? Absolutely. We'll be right with Stan Harley, the Harley Stock Market Letter.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Stan Harley, the Harley Stock Market Letter. Stan, would you like to continue?
Absolutely, Larry. Next couple of charts, we're going to delve into something a little bit different. Here's the gold market, which I know you like to talk about a lot. This is a monthly chart going back 50, 60 years. And what I found with the metals market is we tend to see important troughs about every 94 months, plus or minus. Ooh. 94, there's some math behind that. That's Lucas 47 times 2. Not only high-to-high functions, but low-to-low functions are derivative of the Lucas number series. Gold has an interesting interesting signature, different from the stock market. Gold tends to make spike tops and rounded bottoms, as you can see. Mm-hmm. But nevertheless, the trough-to-trough sequence is right at 94 months, plus or minus. Wow. Should the pattern continue, it would suggest to me gold is in a downtrend right now with a little back and fill, but the dominant trend is down, and the next 94-month cycle low is due ideally October of next year. So we got about another 10 months of downside before we hit bottom. Now, gold tends to make rounded bottoms, so I would look for some type of scooping out here into a low next year.
Okay, very good, yeah.
And then the last chart I brought here today, Larry, is Bitcoin. And certainly in the news a lot lately with the one company going belly up yesterday. Bitcoin, like gold, tends to make spike tops and rounded bottoms. It has a very similar signature, which is just the opposite of the stock market. The stock market typically makes spike bottoms and rounded tops. But Bitcoin, probably a lot of people struggle with Bitcoin, as it turns out from putting my Fibonacci Lucas glasses on here. There is order to be made here. This goes back to the very first day of trading of Bitcoin. It's a log chart, which makes it a little bit easier to analyze. And what I have found is every single high, 100% of them, from the very first one in June of 2011, can be defined by a Lucas number, or its double. The high in April of 2013 was 22 months. After that June 11th high, of course, 22 is Lucas 11 times 2. The high in 2013, in November of that year, was 29 Lucas months from the June 2011 high, and so on. The November 10th high, exactly a year ago, in Bitcoin was 125 months, but that's just 2 months over the Lucas number 123. Yeah. So we're heading south. Now, what to look for as this market heads south? Well, this chart also gives us some very useful tactical information as well, I believe. Notice every time Bitcoin has made a spike high as denoted by these Lucas counts. Every single time it's pulled back to a base power of 10. So for example, following the June 2011 high, it pulled back below the number 10. Okay, the next high occurred in April of 2013. It got above 100. It pulled back below 100. That's 10 to the second power. The next high in 2013, at the end of that year, got above 1,000. It pulled back below it again. In fact, it even tagged the 100 line. The next push up took Bitcoin to above 10,000. It pulled back below 10,000, and so on. This latest move never reached 100,000. But that's not the important point. The important point is, if history is any guide, before this thing is done on the downside, we should be back below the base power of 10 that preceded the move. That base power of 10 is 10,000. So what does that tell me? It tells me that before Bitcoin bottoms out, we should see 10,000 revisited once again. And we're at, what, 16, 17 right now?
Yeah, wow. Hey, Stan, may I use that chart for the newsletter this week, that Bitcoin chart?
Sure.
Of course, I'll give you a salutation for it, but that's
Absolutely.
really a beautiful chart. I like to see that log chart because I became interested in this stuff back in 2013. I'd been working with John Jameson for quite a while, and he'd been long this stuff from about $100. And when it pulled back to $100, we were chatting, and that happened to be a 382 retracement of the low we made, way back in 2012. So been watching, but boy, it follows trading-wise for shorter term. It follows the fib numbers, just absolutely unbelievable. I've been watching coin. I've never put a dime in any of that stuff, Sam. I'm just watching it. It's like trading rice. I like to eat it, but I don't trade it. So I've been, I still watch it because it trades. So it's in the news all the time too.
Sure.
You just never know about they talk about they got rid of this guy. Well, they didn't get rid of him. They hurt him really badly. This Sam Bankman-Fried, and his back name is his last name is Bankman-Fried. Boy, if that's not a good idea for a trader, huh? Anyway, he lost $9 billion in one day, Stan, the largest drop that anybody had ever had in the history of keeping losses.
Wow.
Yeah. And not only that, but he's still got 800 million left, and he's not even concerned about it. Hey, he's having fun on his computer. He doesn't have a fancy car. He just didn't spend the money. I think if I had $9 billion, I'd have spent a couple $100,000 on something, Oh well. Hey, listen, thanks for joining us, buddy. And anytime you have something special that you want to do, we'll have you on again in a few weeks. But if you need something that really deserves our attention, please, keep in touch, and I'll get you on just as soon as possible because we really like to see your charts. You do a great job, and keep it up.
Thank you. My pleasure.
And enjoy the snow because it'll be snowing back there very shortly, my friend. You'll miss Scottsdale then, I'm sure of that.
Hey, remember, I'm coming to Arizona. You and I.
I'm going to be here. Sarah and I are going to come up, and we're going to take you to dinner. So get ready for it. We've got some friends that it doesn't cost us anything because we got some friends in the casino, so we'll have a nice meal on them.
Okay.
Stan Harley, folks, the Harley Stock Market Letter. Just Google it, and he'll be happy to send you a chart out of what he's doing and stuff. But it's always good to have him as a great guest. By the way, on Monday, our guest is going to be none other than Bill, Mr. Meridian from Vienna, Austria. He'll be our guest, I believe, on Monday. Yeah, he'll be our guest on Monday. On Tuesday or Wednesday, Wednesday or Thursday, we're going to have Peter Elides. He's going to pick one of those days for us. And I had one other guest that was coming on again. I'll have to remember what it is, but I don't remember now. So we'll have to keep that in mind as we're looking. So what we're going to do is when we come back, I want to talk just a tiny bit about the gold market one more time and also about the bond market. Both of those deserve our attention because everybody's getting really excited. These are bear markets that have been coming down for quite some time, and they may have made the major bottom. They may have. But let's talk about it when we get back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I posted a chart here, the weekly chart of gold, and you have to pay attention here, folks, because this is different. You can see when we hit that 78% level there at 16.18, we exploded out of here. You know, we're $170 higher in a week, and that is really, really important. That wide-ranging bar tells you it's for real. We've got new players coming in, silver going crazy. You know, silver jumped $4 an ounce. And trying to buy silver when you go into to try to buy these silver rounds is very difficult. This is going to be a big deal. Now, we're running at the same level as we did before, so I'm expecting a pullback. And the key word there, boys and girls, is expecting. And I don't know if that's going to happen or not, but we want to watch the small ABCD on a half-hour chart and also the 382 of any retracement. So the 382 on $170 is, you're talking that's a considerable amount. That's like $70. So we could get one of those without too much trouble. So let's take it. It's not $70, folks. It's $40. But we'll take a look at that, and that's very close to the harmonic number of gold, which is 32. So we want to hit that. If we get it right on the money, we should be watching it closely, because with that spike like that big wide-ranging bars are really important for technical analysis, folks, because it's telling you that there's a lot of power in there, and it's like trying to catch a falling knife. You want to wait for the knife to fall before you get it. So we're going to keep a close eye on that. I'm not going to do the bonds now because I've got too much work to do over the weekend on those, both bonds and notes, but I'll cover that in the newsletter this weekend, and I'll try to mention it, of course, on the radio show on Monday. And again, Monday will be Bill Meridian from Cycles Research, and then Wednesday or Thursday we'll have Peter Leides, one of those 2 days. He'll be our guest too, and then we'll talk about what the stock market is doing. So live every day in an attitude of gratitude, and may God bless.